What's up, and welcome to the stream. This is another edition, another segment on Rethink Finance, where we're going to cover, as we always do, we're going to take a look at Bitcoin. We're going to take a look at major index funds. I'm talking about your Dow Jones, your S&P, your Nasdaq, right? We may even take a look at the Russell 2000s. So we're going to cover that and a lot more here on today's video. I'm going to give my opinion, my overview of the market and what's going on. But before I get into that, make sure you like today's video. Make sure you subscribe, do all that good stuff so you can help support the channel. Let's get right on into it. So here we're looking at Bitcoin on the 4 hour. I did a little teaching on this one, on this pattern and this structure as it was developing earlier. What was it? No, it was over the weekend. It was last weekend actually. So we was talking about Bitcoin. We was looking at it, and we all know it crashed. It went from like 42,000 to as low as $17,500 or whatever. So we all seen that intense sell off. I mean, the bottom came out of these markets. I mean, as we knew, right? We talked about this months ago. We knew what was looked like was shaping up, right? Let's take a look back here. If you recall, if you follow this community, we talked about this ascending, this rising wedge here, right? We talked about this and we got the bearish breakdown, and that's when we seen our lowest low of the entire crash, right? But then what happened? We talked about this over the weekend. You had this bullish development that was taking place, and we got into my strategy, right? The five different things I look for before I place a trade, right? We talked about that, and we had four out of the five, and we talked about the major one was the trend that you were in, right? And how this bullish setup, this broadening descending wedge, how if it played out, it probably would underperform, and that's exactly what we got. And it's, to be honest, it was a pathetic rally. If this, I'm gonna get into it. I'm gonna use some measurements and some different tools. If this was to rally off of the lowest low of $17,500, if this was to rally off of the lowest low of the entire crash, we could be seeing more downside, and that's what it looks like we're getting. I mean, look at here, look at live price action. This is what it looked like we're getting. We're back testing 2018 cycle high here at $19,891. I mean, you don't want to be there. You want to separate yourself from this support. Because if you keep sitting here and you break through it, you will. There's a highly, the probability is very high that you will go back and see and back test 17,000. I mean, depending on how you are playing this thing, I don't know. I'm not here to tell you what to do, but you could be seeing 17.5 again, or maybe even lower prices if $19,891 don't hold up. I mean, because look at this pathetic. This is pitiful. This is beautiful though. At the same time, that's the irony, right? That's the irony of the art, right? Look at this. From this low to this low, right? The seller exhaustion was there, right? Sellers were getting exhausted. Buyers came back in, right? You broke back above 2018 cycle high in 19,000, and you back tested it as support for the first time in history. So you were licking your chops. You had the bullish pattern, the Bukowski structure, the broadening descending wedge. You got the breakout. Things was looking glorious. But what did you do? Like a scrub. You up thrusted and you confirmed what was once resistance here on June the 21st, right? You sold off, you up thrusted, and all you did here was confirm what was once resistance as resistance again, and now you're rolling over and you're back testing the 2018 cycle top. Pathetic price action. Pathetic. That is not what you want to see if you're going to attempt to reverse a downtrend. I'm just keeping it real. Pretty scary stuff. I tell you what, you better hold this level. Think I'm kidding. You better hold this level. Sorry. Get that so where y'all can see it. You better hold this level. That's all I can say. Right here, 19,000, 2018 cycle top. If you bearishly break through this, you you probably will see 17,000, 18,000 again, and you better hold that. Because if you don't hold that, look out. So that's Bitcoin. Scary. So let's take a look at something even scarier, right? Let's take a look at something even scarier. Here we go. Let's take a look at the Nasdaq, right? So this is a horror movie, man. This is what this is. This is a horror movie playing out in real time, and so many people are unaware of it. Like, this is just think about it. The people that you love, the people that you care about, this is their retirement. This is their 401ks. This is the Nasdaq. Look at it. Burn this image in your mind. Just think about it. Let's go back in time. Look at this is pre-COVID all-time high, right? This is 2020, February 2020, before COVID was a thing. This is where the Nasdaq was at this level. Let's say $9,700 before COVID even came. COVID came and crashed, right? Remember, everything shut down. So the market crashed. Everything tanked because of the shutdown. And we saw from 9,000, you saw this thing drop all the way down to 6,500 in a matter of February to March, a month. Very steep, sharp decline. So now as we progress, so right here, March 2020, this is when the largest stimulus package ever went into effect. Where the Federal Reserve turned on the money printers. They bailed out everyone. They bailed out the companies. They even bailed us out. Remember all the stimmy checks you were getting? That's this. This is the money printer going on. This is the money printer turning on. So it spread in this insane rally, right? All the way to the top. And now, can't you see how momentum has shifted to the downside? And we were here. We were here. This is when, coming into the new year, this is when we were wiping our hands with this, right? Because we saw, let's see if I can zoom in on this real quick without making it weird. So this is when distribution was confirmed and the top was in. When you made this highest high of the entire rally, money printers came on, all the way to 16,000. You sold off and you created the second high, which was lower than its previous high. You see that, right? And then let's look at here on the oscillators. So you have momentum showing bearish divergence. So, buyers were getting exhausted. Sellers were stepping in. You had all that confirmation here on the oscillators, all the way back in January, February of this year, man. And now look, you got the follow through, and momentum is clearly not on your side anymore. So this thing is real. And if this level breaks here, we could be going to see COVID lows, man. But this is the irony of this. This is what you have to think about, right? I'm not here to try to scare anyone, right? I'm not trying to scare you. I'm just presenting the data as it exists. So this is the thing. Back here, right, 2020, this crash happened because the world was shut down, right? So if we see these lows again, we break this level. The only thing that makes sense, if we break this pre-COVID all-time high, the only thing that makes sense is down here around about 886, 76 down here. Right? That's the only thing that makes sense. Not saying that we are going that low, but that's the next level that makes sense. So if we see these levels, see this, we weren't even operation. The world was shut down. But if you go down here now, and everything is fully functional, right? The world is supposedly, operating, and you're here at COVID lows. That's extremely bad. That's extremely bad. For example, then I got to go. Let's look at Carnival Cruise Lines. Can you see this? Look at Carnival Cruise Lines. This is scary, man. And I say this is scary because you're down here in value areas, right? Like this is the March 2020 low. You are back there, right? Like I said, here you were shut down. Business was not functioning. Now your business is up and functioning, and you're back at your lows when you were shut down. Wow, let that sink in. And no one is buying it. So if Carnival Cruise Lines breaks $7.81, $8 convincingly, hold on, I'm a zoom out because when you're in doubt, zoom out, right? So I'm gonna zoom out so you can see where you could be headed if you break this level. I'm not saying you are going there. I'm just saying where you could be headed if you break this level. Let me zoom out a little farther now. I'm sorry. I want to make sure I'm able to fit this all on one screen so you can see. So, okay. If Carnival Cruise Lines break $8 and continues to plummet, the next level to make sense is $5.93, $6. Anything below $6, man, you're going back down to $2. Talking about Carnival Cruise Lines that was trading at in January, or just a couple of years ago, $70. And you talking about at $2. That wow. I'm not saying you're going now. I'm not trying to freak anybody out. I'm just looking at the data. Like, this is crazy. What's happening? So be careful out here if you are got fresh capital, profits from the previous bull market, and you're thinking about jumping into this thing and buying this discount. Just be careful, man. That's all I can say. Just be careful. Because it looks like we could be seeing a lot lower price, a lot lower prices, man. Uh, what's another one? Let's see what else. Ah, we talked about this one on the previous stream. Let's look at Party City. Let's look at Party City real quick. So if you know me, all right, let me put a chart up. So if you follow me and you have an idea what I look for, this chart looks so freaking bullish, right? Is that the value perceived areas, right? You have this gorgeous shark, gorgeous bullish shark. You're down here at the PCZ, right? Where strategic entries for longs would be happening, right? You had this inverse head and shoulders. Let's talk about inverse head and shoulders. I'm gonna show you something. Then I got to go. It's starting to get good now. You see this inverse head and shoulders scuffed, right? Neckline broken, destroyed. Like, look at this. Look at what happened here. Look at what happened here when tops are confirmed. Inverse head and shoulders, textbook Bukowski structure. You broke the neckline. You eventually came back up to back test the neckline. That's resistance. And once this was confirmed as resistance, it was sayonara, Party City. Party over. Head and shoulders, breakdown, back test neckline. Could not, look at the upthrust. Could not break the neckline back above the neckline. And it was party over for Party City. And now you're sitting down here. These value perceived areas right? 886 real deep retraces, right? This thing has lost over 88% of its value from this previous swing high all the way back up at $11. 88% of its value lost. Deep retrace. Value perceived areas, and no one is buying it. So Party City, man, you're at $1. I'm telling you, you're not gonna get. I mean, I'm not gonna say it could go lower, but this is like extremely valuable areas, man. But Party City, though, 10 years from now, will Party City even be a thing? That's up for you to decide. But yeah, value perceived areas, no one is buying this crap. Let's take a look at the Dow Jones. Alrighty, taking a look at the Dow Jones. We talked about this back in when the recession first was in, right? We talked about it with the Nasdaq, right? You had this high, second high, sell exhaustion, all that stuff. So we saw this here. This when the recession was in. We knew it. We washed our hands with this thing, and we talked about the same thing. We just looked at that structure that was on Party City, right? The momentum shifting structure, head and shoulders, neckline broken. This one actually was able to back test and break back above, but you had a double top here, top confirmed here, which is at a previous resistance going all the way back to August of 2021. Confirmed, top destroyed, identified where support would be. We got the bounce. So this is okay. So I'm gonna use Fibonacci because I use Fibonacci, when I chart, trade, whatever. All right. So I'm just throwing a Fibonacci retracement tool. All right, we're gonna talk about this real quick. Let me plot it first. Let me show you. Like, this is a pathetic attempt for a rally, man. Like, if this is rolling over here, right? I mean, it could just bounce here and continue to go up, right? Let me see if I can make this where you can see it a little bit better. Yeah, let me do that. All right, so you got this bounce, right? You're selling off, you attempted a rally, and according to Fibonacci, like, so these different levels mean like you have shallow retrace, you have moderate retrace, right? You have common retraces, and you have deep retraces, right? So the 23.6% is your most shallow retrace. The 38.2 to the 618, right? That's your common retrace. And 50%, that's your moderate retrace. And when you start to get to 786 and 886, those are deep retraces, value perceived areas, right? So this retrace is pathetic. It didn't even complete, right, the common retrace. That's how weak this is. And this is a testament to how bearish this market is. If this thing was in a bull trend and bounced like this, man, you would have got a 618, 786 retrace all the way to back up here, man. So you see what I'm saying? Very shallow retrace. It didn't even break. You see this 382 here? That's a common. It didn't even complete the common retrace. Common retrace go from anywhere between the 382 to the 618. So anywhere between 31,008 all the way up to 33,003. You didn't even get that before you got rejected and starting to come back down, man. Bearish stuff. Bearish stuff, man. So that's according to Fibonacci. You can look that up. You can determine how to use it. But this is a pathetic bounce. And now you're rolling over. And it's telling you, man, Dow Jones. You don't have to listen to me. You don't have to take my advice. You don't do anything. Just do your research. Do your own research. But I'm telling you, if this thing comes back down and tests this level and breaks it, which is what we talked about it pre-COVID all-time highs. Yeah, man, we talking about Dow Jones, bruh. The Dow could have a lot of downside left in it. That's all I'm gonna say. Things are looking a little weary, feeling a little woozy here. That's your Dow Jones, your Nasdaq, your S&P 500. Feeling a little woozy here. I'm just saying, man. We need a bounce. I mean, we started to break these pre-COVID all-time highs. It can get a little dicey, man. Just saying. Pray for a bounce. These are your retirement accounts. This is your 401ks. It's your savings, man. It's your savings, man. Pray for the bounce. So I'm going to continue to look at these charts, right? To keep analyzing a few different things. If you like the video, remember to hit that like button, subscribe, comment. If you agree that it looks like we are effed, hit that like button, subscribe, comment, share, do all that good stuff. But it's not looking real well. And here's your corn, man. Here's your Bitcoin. Here's your corn, man. Look at this. I'm telling you, it better hold. It better hold above $19,891, or your corn goes down the hole. I'm out. It's getting late. Y'all have a good one. Peace out. I'll see you on the next one.